A lot of ground covered there in that interview with Janet Yellen. One thing that I'm sure made a lot of people's ears perk up is what she said about tariffs, saying that they're on the table, they're being reviewed. How should investors view that?
Well, certainly tariffs are a negotiating tactic. And so I think this is a way for the U.S. to extract some value out of the China side. So I think certainly China has a very dominant position in both solar and electric vehicle. And I think there's a desire, as Janet Yellen said, about raising domestic consumption. That's something that would benefit all U.S. investors because of the exposure of U.S. multinationals to China's domestic economy.
One of the things that Janet Yellen also talked about is the fact that European officials, that they're investigating Chinese, as you mentioned it, called it dumping of electric vehicles and solar panels and things like that. Realistically, today, how big of a threat is that potentially to U.S. industries? As Janet Yellen mentioned, that there's no restrictions on China selling EVs in the U.S., but so far we haven't seen it.
Yeah, certainly. You've seen a number of Chinese electric vehicle makers make inroads into the European market. Certainly, auto manufacturing supports a lot of jobs. What you're seeing a little bit from the Chinese electric vehicle makers, companies like NIO, are actually building factories in Europe. So I don't think we should expect any imports of Chinese electric vehicles into the United States, but potentially maybe there's a way that these Chinese electric vehicles could actually manufacture those vehicles in the United States. And certainly those vehicles are available in pretty much everywhere in the world other than the United States, but very, very high tariffs. But maybe there's an opportunity to build them in the U.S.
Some of this protectionism talk that we're hearing, both the U.S. side and the Chinese side, how impactful is that potentially to a lot of the multinational companies here in the U.S. that have operations in China? What comes to mind is an Apple or a Nike.
Mm-hmm. Yeah, 100%, Frank. I think whether you're directly invested in China or not, you're implicitly invested through the very strong revenues of U.S. multinationals, certainly like Apple and Tesla, which actually face very, very steep challenges from local players, but certainly Nike and Starbucks and McDonald's and a whole host of others. And those profits they make in China then sent back to the United States. So thus far, there's an open playing field for these companies in China. Obviously, they have to abide by local rules and regulations. But I think it's important, as Janet Yellen said, if China can focus on raising domestic consumption, it'll really help a lot of U.S. multinationals in China, because they tend to be geared not just to the industrial sector like a Caterpillar, but many to the consumer, which we've seen a slow comeback in the post-zero COVID era thus far.